Hello everyone, welcome to my channel where I talk about personal finance. Today I'm going to talk about why I should pay off a 0% car loan fast. Before I get into the video, be sure to subscribe and leave a comment below saying I subscribed. I will try to personally reply to your comments. Let's get into the video. If you want to reduce your monthly debt payments faster, paying off your auto loan before the end of the loan term is appealing. However, making that decision is based on a number of criteria, including your current interest rate, monthly payment, and whether or not you can afford to pay the final lump sum. It might be worthwhile for the majority of individuals. However, before taking the plunge, you should examine your financial status. If you have the cash, paying off your car loan early might have a lot of advantages. The first thing is improve your debt to income ratio. The debt to income ratio is the amount of debt you have compared to the amount of money you earn. The lower your debt to income ratio, whether you are taking out a credit card or buying a house, the better you will appear to potential creditors and lenders. Your debt to income will be reduced if you pay off your auto loan. Next thing is every payment you make on a car loan goes towards both the principal and the amount you borrowed and the interest rate. Paying extra towards your principal reduces the amount of interest you will pay during the loan's duration. When you pay off your debt sooner, you will have more money in your pocket each month to spend on other things. It also decreases your auto insurance cost and allows you to save for a rainy day, pay off debt, or invest the money you saved. So paying off your car loan sooner will really give you extra money in your hand so you can save. Because the money you would have put towards the car loan, now that you do not have the car loan, you can take that money and save and increase your savings. The third thing is own the car. When you pay off your auto loan early, you become the sole owner of the vehicle rather than the lender. If you ever need to sell it, you may be able to make more money than if you still had a loan on it because the lender will seek payment from the sale first. Furthermore, if you take out a car loan to pay for your vehicle, the bank or lender has the right to seize your vehicle if you skip a payment or fall behind. Even though you drive and maintain it, the car remains the property of someone else as long as the loan is outstanding. Review your options before paying off your auto loan in full to evaluate which one makes the most sense for your financial circumstances, such as pay off the entire balance. Depending on how much is left on your auto loan debt, you may need to pay a few hundreds or thousands of dollars all at once to pay off the entire outstanding sum. Make a portion of the payment. If you receive a bonus at work or sold something for a substantial sum of money, you can put that money towards a large portion of your auto loan. Increase your monthly payments. You can increase your monthly payments in increments if you get a raise, add work, or start a new side job. This will cut down on the amount of monthly payments required to pay off your car. This is a significant financial choice, and you should consider it carefully, just as you did when you originally took out the auto loan. If you have a car loan, think about paying it off. You have the financial means to do so. Paying down your auto loan makes sense if you do not have any other large, more expensive financial responsibilities. You will have more money to spend on other things in your budget. However, if you do not have the funds, you may want to consider other solutions. You do not owe anyone else any money. Examine your budget, including how much money you bring in and how much money you spend. You may have other sorts of debt that are larger than duty in if you wish to save on overall interest. Because credit cards and personal loans have higher interest rates than auto loans, you may wish to put more money towards them. You are putting money aside for a large buy. A car purchase is a substantial financial choice in and of itself. But lowering your debt to income ratio and increasing your cash on hand is critical if you are trying to save for a home. Paying off your auto loan early is one way to do it. Thanks for watching this video, and do not forget to subscribe to my channel.